So I absolutely love sharing information with others, and I realize that when times are uncertain, like right now in the stock market, it can help to have a voice of reason, someone out there that gives you some facts, gives you some insight on what they're doing, and just kind of provides you with a more broader view as opposed to kind of short term, what's going to happen tomorrow, what's going to happen the next day kind of view. But I do want to preface this video by saying this is not financial advice. I'm just sharing with you what I've personally been doing in the stock market the last few weeks and months. So please, do whatever you want with your money. It's your decision at the end of the day. Do it according to your risk tolerance and do it according to your time horizon as well. Also, I want to just say this right up front. I don't know where the bottom is. No one knows where the bottom is, so don't bother asking that question in the comments. However, when I discuss my strategy here and what I've been doing, it'll kind of be clear that I really don't care where the bottom is as long as I find great value in the stocks I'm buying. So I got a message from a member in our VIP membership group the other day on Discord, and it kind of reaffirms why I'm doing what I'm doing here on YouTube and why I want to create this video today. So this member states that they appreciate my consistency and sticking to my convictions and how it helps them and others in the group as well during these tough times. And honestly guys, I always appreciate comments like this from you, so thank you for your continued support. And my way of giving back to you is by publicly sharing what I've been doing in my portfolio these last few weeks. So if you appreciate any of this or you get value out of this video, all you have to do is hit the like button and subscribe to this channel. It helps tremendously. Okay, so let's start off here with my strategy. So this really hasn't changed over the last few months despite the market selling off. I focus on high quality businesses with strong moats, strong free cash flows, growing revenue, and a long runway ahead for it to continue dominating the market that it's in. Now, over the last few weeks, I've actually taken the opportunity to concentrate my portfolio a little bit. I actually cut out some lower conviction names in my portfolio, and I've used that capital towards higher conviction names in my portfolio. Now you may be wondering, why would I do this? Why would I sell out of positions? Well, stories change over time, theses change over time, and flat out there's sometimes opportunity in the market where holding certain types of stocks does not make as much sense as holding other types of stocks. And I believe we're in that kind of market right now. You have to understand, when we see broader market corrections like this, every single type of stock comes down. There are few stocks that actually are able to withstand the market correction. AbbVie is a really good example. And there are certain stocks that just get absolutely decimated. Roku is a good example of that. So then what you can do is actually look, okay, so where do these stocks that are holding up, where's their potential for the next few years? And compare that to stocks that are beaten down, where's their potential for the next few years? And what you'll often find if they're good quality businesses is that the ones that are beaten down just because the market sentiment, not company specific issues, are the ones where a lot of money will be made over time. Now there's obviously a time and place for these strong blue chip dividend, aristocrat type companies. But I believe in this market, if you're actually looking at a longer term horizon, there's a lot more opportunity in these beaten down growth names. So what I do is I look, 3 to 5 years out, sometimes even longer. And if I see a company that I think will only grow, 5 to 10% per year versus another company that could grow maybe 10 or 20% per year, I will take that capital, and if it's a high conviction name, move the capital into the other stock. But you have to understand, by doing this, you're actually taking on more risk because the name that's down could be down for a reason. There could be some underlying issues, and it's obviously going to be a more volatile name, so the recovery may not be as, smooth as you're expecting. But if you have a longer term horizon and it's a good business and they're executing and everything's going well for them, I believe the chances of it recovering and providing you with some really outsized returns is extremely high. Okay, so this is the first thing I've been doing, kind of concentrating my stocks, using stocks that I've used as, piggy bank type stocks, selling those off, moving capital to stocks that I believe are super undervalued right now. So that's my first strategy point. The next thing obviously is taking that capital and deploying it into extremely dominant companies that I think are just going to grow their moat over time. Now, I'm not going to name any specific stocks in this video because remember, it's not financial advice. However, the sectors that I'm focusing on are software type companies and SaaS type businesses, because there are some out there that are absolute gems that produce a ton of free cash flow, but they've just been pulled down with the overall market. That is where I'm putting my focus for the most part, really. And this kind of brings me to my third point that I want to discuss with you guys, and that's how do I buy? So like I mentioned, timing the bottom is near impossible, so I don't bother doing it. I don't waste my time trying to figure out where the bottom is. What I employ instead is a strategy called dollar cost averaging. You have to understand that when you try to time a bottom, you're probably going to miss out on some massive upside swings, because when stocks bottom, they recover quite quickly, and maybe you think, oh, this is just a dead cat bounce, just a bear market rally, blah, blah, blah. And things just keep going higher and higher and higher, and then you end up missing out on some massive gains just because you were trying to time where the bottom is. Trust me, I've seen this happen many times before. March 2020 was probably the perfect example of this. Everyone waiting for a bottom, and they miss out on massive upside when stocks recovered. So as you can see here, as I've shared with my VIP members, is just do a bunch of dollar cost averaging purchases over a few days, over a few weeks, and just keep averaging into these companies that I feel are the best values today, and specifically companies that don't typically go on sale too often. I like DCA because it keeps me engaged, it keeps me focused on the companies that I really want to purchase, and it also helps me just not worry about bottoms like I mentioned. It's honestly one of the best strategies in my opinion for scaling into positions. Now I understand, back in March 2020, things were crashing because we weren't sure where the world was going. Everything kind of looks doom and gloom. We're shutting down the economy. It was a scary time to be invested. However, hindsight, it was pretty obvious that that was a buying opportunity. That's when I was dollar cost averaging. And now this time around, there are different sets of uncertainties. There's inflation, there's midterms, there's elevated valuations, there's margin debt and leverage that's out there. And of course, you have the biggest thing, you have the Fed raising interest rates. So there's a huge set of fears right now. But in my opinion, these fears are kind of nothing burgers compared to what we saw in March 2020. So it's much easier here to dollar cost average into these positions, especially companies that are kind of gonna thrive regardless of all of these things that are happening in the short term here with the world and our economy. Okay, so now you're probably wondering, okay, Nick, so you're dollar cost averaging, you're buying good quality companies, all this kind of stuff. What happens if these stocks that you're buying just keep going lower and lower? So I think that's something you have to accept and realize is a possibility, because no one can time the bottom, and we don't know if this is kind of a short, sharp correction or if this is kind of a prolonged bear market that we're entering. Regardless though, dollar cost averaging lets you keep lowering the cost basis week after week, month after month. And if you have other income coming in from a job or something like that, it's honestly the best way to go about it in my opinion, because you will always have new capital to deploy into your strongest conviction plays. Now, if you don't have any money coming in, probably look back to the previous point that I discussed, which is focusing on the highest conviction stocks, cutting out some positions that may not be as high conviction or may not see as much upside you believe in the next, say, 3, 5, 10 years, and putting that capital to work in businesses that you think are beaten down unfairly that will recover sharply. What I will say on that point though is that focusing on speculative or story stocks, not something that I personally would be doing. This market, in my opinion, is going to focus now for the next few years, at least, on companies that are actually thriving on their fundamentals. So if you're just gonna throw money in there to some random spec stock that, ARK Invest is buying a ton of shares in and all this kind of stuff, you have a higher probability of actually losing a lot of your capital versus focusing on the top quality names. I know the thrill of, hey, I can buy the stock for like $2, it could go to $10, I can make so much money on this. I know that's tempting, but if you think about it, there's a reason why some of these stocks have fallen sharply and some of these other stocks have only fallen a little bit, and that's because the market realizes these stocks that fall a lot are ones that are super speculative, could even go bankrupt in the next few years, versus the ones that haven't fallen that much. Yeah, maybe valuations were a bit elevated, but now they're kind of contracted to more attractive levels, and those will just now continue compounding over the next few years, providing really good returns. Now, me personally, I've pretty much added all the companies that I want to add to my portfolio over these last few weeks. I've opened a ton of new positions in brand new stocks, built those positions up fairly quickly, but there's still a lot more room for me to add to these positions. They're not fully up to size yet. However, I'm extremely satisfied on where my portfolio is today. I have maybe a couple more stocks that I'm willing to cut out and add to the higher conviction names if I do require more capital, but right now I'm sitting okay with my cash position. So that's just kind of some clarity on where I stand today with my portfolio. Now, in the build up to this, guys, over the last few months, I've made some videos on this on YouTube. I've talked about it with my VIP members. You know, we could kind of see this sort of bubble just getting bigger and bigger, and speculative investing was pretty much at its peak. So I was personally scaling out of a lot of speculative positions. Of course, I held a couple of them like Beyond Meat and Peloton, which of course are not doing too well. Peloton I actually cut out of my portfolio now. So we all have losers in our portfolio. I'm not here to tell you that I have no losers. I definitely do. But I think the environment now is going to be very different from 2020, 2021, and we need to start focusing once again on valuations. So really, guys, I can't stress enough how important it is to be very, very selective with the businesses that you invest in during these times. I can't tell you what to do, but I personally would not be gambling my money right now. I would be putting it in to companies that I am confident will do well over the long term because of the industry that they're in, because of their execution so far, because of their balance sheet, because of the money that they produce. Those factors are pretty much solidified for a lot of companies, and they'll just keep getting better and better over time. And yes, I get it. There are some businesses that got hit really hard, down massively, but it's because either their valuations were too stretched or the market just thinks it's too much of a story stock right now. They haven't proven the execution yet. So just keep that in mind if you do want to have, some positions in those speculative names. Either way, guys, just be careful out there. If you want to join our VIP group in the Discord and chat with me or the others, link description down below. But anyways, thank you so much for watching. Don't forget to invest positively, and I will see you in the next one.